Subclass 1.4, Motor Policy, Part 1. This is also a long session, hence we've split them up in Part 1 and Part 2. So let's look at Part 1. Definition of a motor policy. A motor policy is a contract in terms of which an insurer, in return for a premium, undertakes to provide policy benefits if an event contemplated in the contract as a risk relating to the possession, the use or ownership of a motor vehicle occurs and includes a reinsurance policy in respect of such a policy. So once again, we can see that the motor policy it's a contract in terms of which an insurer, in return for a premium, it's always in return for a premium. They will not do it for mahala, for nothing. The insurer undertakes to provide policy benefits if an event which is in the contract, contemplated in the contract as a risk relating to the possession, the use, or the ownership of a motor vehicle occurs, and it includes a reinsurance policy in respect of such a policy. All right. Motor vehicle insurance. Please remember, this is not car insurance. Car insurance is commercial insurance, and which has to do with contractors while they're busy constructing a building. Remember, if you forgot, just have a look. If you've forgotten. So, motor vehicle insurance, personalized motor insurance, also called motor vehicle or vehicle insurance, is the most popular of short-term insurance policy types. Policyholders purchase motor vehicle insurance to protect their motor vehicles from loss or damage following an accident, theft, or hijacking. Motor insurance, subject to terms and conditions stipulated in the policy wording, and that will differ from short-term insurer to short-term insurer, can also provide cover for damage caused by the insured's vehicle to other vehicles, other goods or property belonging to a third party. So if you're the cause of the accident and the third party's vehicle is damaged, your insurance will also pay for that vehicle or that trailer or that caravan or boat or whatever. Or if you've driven through the wall at the property, your insurance will cover that repairs. At the outset, the insured on a personalized motor policy must stipulate the extent of the cover desired. You need to tell your short-term insurance, I want the car, my vehicle, sorry, not car, my vehicle to be insured for 100,000 or 200 or 500 or whatever you want it to be insured for, depending on the vehicle which you drive. Comprehensive cover pays out for accidental loss following a theft or hijacking or damage following an accident to the insured vehicle. It also includes cover for third-party liability, damage to another person's vehicle and or property following an accident in which the insured vehicle is involved and is at fault. A comprehensive policy will typically cover the stipulated sum insured following a write-off, the cost of the repairs, the reasonable cost of removing the insured vehicle from the accident scene to the selected repair shop, the cost of protecting the vehicle, including storage cost and delivery cost of the repaired vehicle. So, if you have ever been in an accident, you will know if you cannot drive your vehicle, the insurance will send the low bed truck to put your vehicle on a low bed truck. That truck charges fees, your insurance will cover that. That truck takes you to the panel beater's workshop where the vehicle will stand, where they will do a quotation for the repair works, but they also charge you a fee, 1,000 Rand a day or 1,500 Rand a day. If you don't accept the quotation and the insurance company want the motor to be taken somewhere else to be repaired, or some of them does include it or they give you a discount. But yes, there's storage fees as well. So that will all make sure that's all covered in your insurance policy. And then sometimes if they have to deliver the repaired vehicle back to you, they might also charge a fee. Extras such as rental car hire following an accident or loss can be arranged, but usually for an additional monthly premium. I have also added that to my short-term insurance, and I think I pay 50 Rand a month for 30-day free car hire. So if I'm ever in an accident and my car is busy being repaired, at least I get the rental car. My insurance company will bring it to my address, and once I'm done, they will come and collect it again. A third-party fire and theft policy pays out for third-party liability, damage to another person's vehicle and or property, following an accident in which the insured vehicle is involved and is at fault. It also covers accidental loss or damage to the insured vehicle only if the loss or damage is caused by fire, lightning, explosion, theft, or attempted theft. It includes third-party liability also. So determining the motor insurance premium, how do they get to that? So let's have a look. The premium charged on a motor vehicle policy depends on a number of factors, and two motor vehicle owners with identical motor vehicles might end up paying different premiums, whether they insure at different insurers or whether they both take out policies at the same firm. That doesn't matter. There's a few things that the insurance company and the underwriter will look at to decide what premium person A is going to pay and what premium person B must pay. And we're going to look at that in the section. So one would expect the premium to vary if different levels of cover were selected, either comprehensive, third-party, fire theft, or third-party only. But even if customer A and customer B seek the same level of cover for the identical vehicles, again, whether at the same insurer or two separate firms, the premium may vary. The reason for this is that the insurers limit their motor vehicle insurance exposures by applying a range of underwriting rules whereby they assess each vehicle owner's unique risk profile before calculating an appropriate risk-adjusted premium. So, these are the factors that the insurance company will look at. They first look about the vehicle. Okay? So let's say these guys bought the same, client A and client B bought the same vehicle. So for each vehicle cover, they will look at the vehicle make, the model, and the age. Where the vehicle is kept at night, oh, that is a difference. Where the vehicle is kept at night, because one might be in front of the garage and there's no fence around the property, but the other one will be inside a, a, a complex, townhouse complex with electric fencing, and it's inside the garage. So those two will have an effect. Do the one vehicle have anti-theft or tracking devices installed, and the other one will have not installed? That will also have an effect. So, and then we look at the second one about the vehicle owner, the insured. This will also have an influence. So the name, the residential address. The residential address, because you get high risk areas and you get low risk areas for hijackings. The age, very important. We all know short-term insurance companies, if you're under 25, they charge you heavy because they say the youngsters, they like pedal to the metal, they give the revs up, they use a vehicle as a racing car, they make lots of accidents, they are high risk. Where the older people, older than 25, we are all about finances, and you know you must use every cent twice. So you don't put pedal to the metal and the revs up. It is touch and go on the pedal and the rev low because you want better fuel consumption. So you drive safer. That's why the premiums and the risk are lower. Um, your previous insurance, previous insurance, your accident claims history. If you claimed a lot in the past for accidents, your high risk premiums will go up. If your claims history is very low, you're a low risk, lower premiums. So similar information might be required for each named driver on the policy and then when you look at the last one, um, about the use of the vehicle, this is also a factor. So both might buy VW combis. The one is just for private when him and his family wants to go on vacation, but the other one buys a combi for business purposes. Oh, that will also be a big influence. You see, where the vehicle is kept at night, the main and other named drivers of the vehicle, and the purpose for which the vehicle is used. If it's used for business, it's constantly on the road. The risk of accidents is much higher, so the premium will be higher. If you use it only to go on vacation, the combi once in a blue moon, it's not as so much on the road, so the risk is much lower to be in an accident. So the premiums will be better. So they need they look at all these kind of things. Also, an insurance claim history. You see, your claim history. Did you claim a lot or not? That is also a factor. Um, and then the first person, the first reason is that insurers use claim experience. They use their claim experience as part of their risk rating calculation. A person with a good claims history presents lower risk and receives a cheaper premium. All right. The second reason is that many insurers offer an incentive to their policyholders not to make claims for small or inconsequential loss events. So when you look at the no claim bonus, the no claim bonus concept involves the insurer refunding a portion of a policyholder's premiums at an agreed future date. Normally, they say after 5 years or after 10 years, or usually 3 or 5 years in the future. So it depends from company to company, provided the insured has not claimed against this policy. Terms and conditions apply per the policy wording. So make sure you know the terms and conditions and your policy wording. Premiums based on client profile and motor vehicle. So premiums vary from one vehicle to the next based on the replacement value, the likelihood of theft or hijacking, the cost of spare parts, etc. Variances also exist due to vehicle use. Is it for private use or business use? The driver's profile, young age, under 25, above 25. Gender, uh, because gender, they say females is lower risk than males. So yeah, that is according to the short-term insurance. Ladies, that doesn't mean to say that you're better drivers. Our males are just also just sometimes you want to dice, and not ladies as much. And the addition of non-insurance value adds. A motor vehicle can be insured for domestic use if the vehicle is used for social, domestic, and pleasure purposes, including travel to and from work. In the event that the insured uses the motor vehicle for certain professional or business calls, in addition to the purposes described under domestic use, then the vehicle must be insured for business purposes use. A third category, called commercial use, is created to allow insurers to determine appropriate premiums for vehicles used in higher risk areas such as vehicle hire, transporting passengers for reward, vehicles transporting commercial goods, and vehicles used in the motor trade, to name a few. This type of motor cover is typically written on a commercial policy. Fair value. Both parties to the insurance contract usually stand to gain or lose something based on the insured value of the vehicle, so it can be difficult to objectively determine. As a result, it is not uncommon for insurers and policyholders to butt heads over what constitutes fair value. TransUnion's Meet and McGrower's Auto Dealers Digest is a trusted and frequently used source of retail and trade values for most makes and models of vehicles in South Africa. And that is what the insurance company usually used to determine the actual value. So motor vehicle policy, the excesses and exclusions. Typical exclusions on a personal lines motor vehicle policy include losses suffered when using the vehicles to transport fare-paying passengers if you were not allowed to, using the vehicle for racing, no, or operating the vehicle while under the influence of alcohol or drugs. An excess is the first amount payable by the insured in the event of a loss. So they will tell you, all right, you must pay the first 2,500 or 5,000, and then you will pay the difference, the balance. It is stipulated in the policy wording and is therefore contractually agreed between the insurer and the insured. Insurers have been quite creative in specifying excesses based on age as well as additional excess says following theft or hijacking, to name a few. Excess traditionally served to deter an insured from submitting a claim for minor damage, but is now also used as a tool to reduce the insurer's risk and thereby reduce the premium. One can distinguish between a compulsory excess stipulated by the insurer and a voluntary excess, which is an additional excess amount agreed to by the policyholder with the insurer. So, what does a vehicle refer to? A vehicle at most insurance companies, not all of them, but most of them, refers to the following types: motor vehicle, including a minibus designed to carry up to 12 persons, and station wagons. LDVs, and LDV stands for light delivery vehicles, in other words, buckies, 4x2s and 4x4s. Motorcycles, now motorcycles includes the following, for instance, superbikes, cruisers, like your Harley Davidsons, nice and relaxed, and you're just cruising. Tourers and scooters and three-wheel and four and quad bikes, also golf carts. Caravans is also referred to as a vehicle, but please note, this is very important, that the contents of caravans, so what is inside the caravans, are not insured as part of the caravan. That would usually be insured under the all risk section. So, if your cameras and laptops and jewelry is inside the caravan, and your nice Nike shoes and designer clothing and leather jackets, because it's in the caravan and your caravan is insured, the contents inside the caravan, those things is not insured. That must be under your all risk insurance on your householder's policy. However, and here comes the difference. However, the permanent fixtures and fittings of the caravan that will be insured, like the beds, the cupboards, the oven, the stove, the fridge, the microwave, those type of things. That will be under the caravan's insurance. Also, motorized caravans. Motorized caravans. Those caravans, your RDVs, that's driving themselves. That does not fall under caravans, but they are insured as motor vehicles because they drive themselves. Well, with a driver, obviously, with a license. But they got their own engine that you can start and you can drive that caravan. Motorhomes, also referred to as motorhomes. And then also, trailers are also part of vehicles. The trailer that you behind your vehicle. Misrepresentation and non-disclosures. So misrepresentation, an insurance company requires an insured, the client, to give honest, full details on all relevant questions that are asked. This is referred to as good faith in insurance and one of the requirements of the law of contract. Therefore, if a client lies or withholds information that could have affected the underwriting, it is seen as material to the policy or the claim, and in such cases, the claim could be rejected. It therefore affects the validity of the contract, and the client might end up paying all his years his premiums. Then he wants to claim, and then they find out he lied, and then they said, sorry, we are not paying. And that client is going to suffer the losses. But it's the client's fault for misrepresentation. Misrepresentation and non-disclosure. So non-disclosure refers to when a client does not disclose all of the required information. For example, the client is asked about incidents that occurred during the last 3 years. The client says that he or she has not had any incidents or accidents on his or her vehicle in the last 3 years. Advisors should probe further, as this client might have had incidents or accidents on other vehicles, which he or she is purposely not disclosing. Or the client only gives one incident and keeps quiet about the other 10. All right. And that's the end of this part. One, if you've got any questions, there's my email address and you know what to do. Thank you very much.